Okay, everyone, it's just past 2 o'clock. I want to thank everybody who's joining us this afternoon. Looks like we've got a pretty good-sized audience today, so I want to welcome everybody. This is going to be the introductory webinar for cheap turnkey houses. We're going to go through some good information for you today. We want to introduce cheap turnkey houses to you, explain how cheap turnkey houses can help you with your real estate investments, and also go through the houses that we currently have available in our inventory. So kind of get started here today. I want to first introduce Pete Julian, the CEO of Triple Net Houses. Pete is also, give you a little bit of background about Pete. Pete has been in the real estate business since 1979 and has been a real estate broker since 1982. Pete's owned and managed numerous commercial and apartment buildings, has been involved in thousands of real estate transactions and sales, and is also a real estate investor himself. During the past 15 years, Pete's been exclusively involved in single-family houses as real estate investments. As I just mentioned before, Pete is the founder of Triple Net Houses and Cheap Turnkey Houses. Pete envisions a company that can provide an opportunity for investors who are seeking above-average returns and want to own real estate without becoming involved in the landlording process. So without further ado, I want to introduce Pete Julian, and Pete's going to talk a little bit about the Dayton market and the concept and the offering that we have through Cheap Turnkey Houses. How are you doing this afternoon, Pete?
I'm doing great, Corey. Hey, thanks for the nice introduction. I'd like to wish everyone attending a good afternoon, I guess except for the West Coast because it's still around 11 a.m. there. But I really sincerely wish, thank you for taking the time to attend this webinar. We recognize that everyone's time is precious, and these days, the world seems to be going quicker and quicker, and we're truly grateful that all of you have allocated this little time period to learn a little bit more about cheap turnkey houses. In any investments, there's a lot of competition for investment dollars and so forth, and people, there's certainly a myriad of different options people have. There's certificates of deposit, which are very, very safe. They don't pay much. Their stock market, that's kind of volatile. It depends when you get in. I guess timing is everything, like in everything else, but it seems to be extremely volatile. What we're looking at is something that provides a really, really good cash flow, month in, month out, year in and year out. Real estate right now is down, and the old axiom is always buy low and sell high. And this is, in our opinion, this is a generational opportunity. I mean, what's happened to the real estate market here in the last few years is quite phenomenal. We are investing ourselves and holding many properties. We can't keep them all, so we're providing opportunities for investors. And we think the timing is absolutely perfect. The first thing that in any real estate investment, the biggest factor is always location. The three biggest factors: location, location, location. All of you have heard that. We are in Dayton, Ohio, and all our properties are in Dayton, Ohio. And of course, Dayton, Ohio is in the Midwest. And Dayton, just like pretty much every other Midwestern city, has lost manufacturing jobs over the years as a result of what's transpired in our economy. Dayton, however, is a little bit different. We've got a big stable base of different things going on. One thing is we have Wright-Patterson Air Force Base. Wright-Patterson Air Force Base employs in excess of 26,000 people. It is actually the largest single-site employer in the entire state of Ohio. And these are good, a lot of them are, relatively high-paying jobs and stable jobs. It's the U.S. government. In addition to that, Wright-Patterson probably, as a result of Wright-Patterson, there's probably another 8,000 or 10,000 support jobs that are not government jobs, but nevertheless are there to support the base. So consequently, that is something that's not going away. As a matter of fact, over the last several years, Wright-Patterson has added jobs as a result of the base realignment program. So we do have that. Located right on Wright-Patterson Air Force Base is the National Air Force Museum, which is quite a museum of everything, regarding the Air Force. The Dayton area also has two major universities. I mean, it's not Ohio State, but these are two big universities. We have Wright State University, which has enrollment of nearly 20,000 students. It also has a medical school, kind of a renowned medical school. They've made a lot of scientific advancements. We also have the University of Dayton, which is well known all over the United States. And the University of Dayton has enrollment of about close to 9,000. It also has a law school. Now, the two universities, in conjunction with Wright-Patterson Air Force Base, have done a lot of joint ventures and so forth, primarily in research, and it has added many jobs to the Dayton area. So we have a stable base, no pun intended, as a result of the Air Force Base and the two universities. Dayton, as you see on the chart, is ranked, why Dayton again, is ranked among the top 10 as far as most affordable and undervalued housing markets in the U.S. And that's CNNmoney.com. You know, Dayton and a lot of the Midwest has never had the huge run-up in prices that have been experienced on, you know, both coasts and Nevada and those areas. It's kind of been a steady growth. The values declined? Absolutely, just like they have all over the United States. And it's a super buying opportunity. What is great about Dayton is the relationship between the prices of the houses and the rents. The rents have really not declined. The values of the houses, like every place else, have declined. So consequently, the cash flow is just phenomenal here. As I stated before, Dayton is home to Wright-Patterson Air Force Base, Ohio's largest single-site employer. Dayton is the 7th largest informational technology area in the entire country. And it's also second, just behind the Silicon Valley, as far as number of science and engineering PhDs. As I just stated, the combination of affordable prices and stable rents allow for a great cash flow. And that's what we talk about, is single-family houses and investments. So it's just a mecca for getting cash flow and buying houses, you know, on an affordable basis. You know, our new we have triple net houses, which has been around now for about 4 years, and you know, people are saying, why cheap turnkey houses? And we still do triple net houses, but there's been a demand for people saying, hey, do you have something a little less expensive? Maybe we can pay all cash. When I say the word cheap, it's not cheap in terms of quality of the house. It's cheap in terms of the price. All the cheap turnkey houses are priced less than $50,000. So, you know, I've just read recently that the last, you know, quarter, there's been more cash deals in the United States in terms of real estate than ever before. So with houses priced under $50,000, it affords people the ability to buy houses many times for cash. This, you know, it's just a great opportunity. So when I talk about cheap turnkey house, as I say, it's cheap in terms of price, but not in terms of quality. These houses are not houses that you buy and rehab. These houses have been fully rehabbed. They all have central air conditionings, mostly new kitchens and new bathrooms. Many have new roofs, you know, new HVAC. Many have new windows and driveways and so forth. And they're really beautiful little houses, and they have great cash flows. So for investors who want a lower price point, many times they can pay cash. Cheap turnkey houses kind of fits the bill for that. They've all been renovated, made rent ready, and they're all rented. So when you're buying one of these houses, there's already a renter in there. Cheap turnkey houses goes a step further. We kind of put our money where our mouth is. We guarantee the rents for the first year. So if you have a house that's rented, say, at $650 a month, you know that first year you're going to get $650 times 12. What's that? $7,800 a year, and that's guaranteed by us. We manage in excess of 200 properties right now, and we have experienced a collection rate in excess of 96% over the last year. Also, the first year, we want to get you off to a good start. We pay the real estate taxes. You won't be paying any real estate taxes, nor will you be paying any property insurance. So the first year, you don't have any of those types of operating expenses. Obviously, you get the rent each month, whether it's rented or not. Again, we experience a real high rental occupancy rate and collection rate. So as far as operating expenses, you don't pay the taxes, you don't pay the insurance first year. That's already prepaid. So that gives you a real significant boost that first year in your cash flow. We have in-house property management. We don't hire it out. We manage it. You know, I'm talking to the property manager 3 times a day, the management people here, and the property manager, the one who manages the managers. So that is, it's all done in-house. We have a vested interest in keeping properties rented and to good tenants, because if the house is not rented, guess what? We're going to be paying anyways during the first year. And after the first year, if we charge a property management fee, obviously we want to keep the houses rented, so we collect our fees. But more important than that, it's the right thing to do. We feel that over the years, by doing the right things for investors, our business is going to thrive, and we want, and obviously the investors' investment will thrive. On a cash purchase, there are no closing costs. We pay them for the investor. Now, just think about this a minute. Let's say someone would buy a $45,000 house and pay cash for it. Well, the first year, let's say that it rents at $650 a month. You're getting back $7,800, almost $8,000. So at the end of the first year, you've got only about $37,000 in the house. So you've already recovered almost 20% of your investment. So the cash flow is quite phenomenal. Just as an aside, we also provide a home warranty for the first year. So if there's any maintenance items, it should be very, very negligible, because there is a warranty. So, you know, we're talking about a great cash flow on a fully renovated house, a house that's occupied, a house that's professionally managed, and a house that's priced cheap, under $50,000. Corey's going to go over a list of the houses that are currently available. They're going fast, and it's as I say, in my opinion, in our opinion, this is a generational opportunity. It's something that you know, people are kicking themselves 3 or 5 years from now, saying, "Gee, I could have, you know, bought this house for $39,000 or $45,000." What's in it for you as an investor? Great cash flow and returns on your real estate investment. As I mentioned, you know, Dayton, Ohio, with the relationship between rent and values of property, it's conducive to an unbelievable cash flow. And this is a truly turnkey experience. As a property management company, you're not the one getting telephone calls from renters, or having to show the house, or having to rent the house, or having to deal with any issues. We do all of that. Basically, you get a statement each month along with your check for the rent. We are an experienced professional management company. Our lead property manager has over 20 years in the business, and we take great pains to make sure things go well for the investors. This is an investment that does give you peace of mind. It's in a sense like almost like a security, in the sense that you know, you're not getting any phone calls, you're not getting any. There's no dialogue between tenants or maintenance or any of those kinds of things. But we think it's a lot better than a security, because the cash flows is much more significant, and the volatility is pretty negligible. So we, in our opinion, you know, cheap turnkey houses is like a job for people, and we want to, you know, I'm sure a lot of you are going to have a lot of different questions, and we, you know, certainly welcome those. If you do have a question about something, probably during the webinar, the best thing to do is to go ahead and shoot an email to Corey Day at cday@cheapturnkeyhouses.com, and we will do our best to answer those questions. Just a little other things before Corey gets into the specific houses. You know, even a house at $45,000 or $40,000 or $39,000, you know, and you know, a lot of people will be paying cash for these houses, but there might be some that might be interested in financing the houses. You've probably all heard the stories. Well, banks don't make loans for, you know, less than $50,000 minimum mortgage, and if the house is only selling for $40,000, that's not going to happen. Well, we've got lenders that'll make loans as low as $25,000, and they'll loan with 20% down. So if a house was $40,000, it's $8,000 to get in, and maybe with closing costs it might be $10,000, but nevertheless, on a $10,000 cash investment, you know, that first year you might get back a significant portion of that, even if you make the payments, because the payments aren't going to be a whole lot on a $32,000 mortgage, $40,000 house with $8,000 down. So the cash flow, the return is going to be pretty good. And we'll get into all those kinds of things on each specific house if you have an interest in it.
And Pete, we do have a couple questions so far, and I ask anybody out there, if you've got questions, feel free to type them into the question pane, and we'll try to get to your questions before the end of the webinar today. But we've got a few so far that I'll throw out there to you, Pete. First question is, what is the management fee after the first year?
After the first year, we charge 10% of the gross rent. So if it rents for $650, it would be $65. Obviously, if there's no rent coming in, we don't get paid, so we have a huge incentive to keep the houses rented. We also pride ourselves in the houses we have are the nicest in the areas that we're located in as far as rental properties. So we're always near the top, and we're aggressive as far as increasing the rents for two reasons. Number one, obviously we get a higher management fee, but we want to do right by the investors, and the better the investment turns out for the investor, the more they're going to tell their friends and perhaps pick up additional houses as they go along. But to answer the question, it's 10%. We don't charge like half the first month's rent, or the first month's rent is a finder's fee or anything like that. We don't do any of that. Also, when we're talking about fees and so forth, as far as maintenance, we didn't really get into that a whole lot. After the first year, during the first, you pay for your own maintenance. Obviously, you have a home warranty that first year, but we have in-house people that do maintenance. We don't, I'll just give you an example, because examples sometimes it's easier than talk about concepts. Let's say someone calls and their air conditioning isn't working. Well, before we call that HVAC contractor, we'll send our in-house person over there. Maybe it's just as simple as you need to push in the circuit breakers because they pop for some reason, or maybe there's a little glitch in the thermostat and they didn't quite understand it. Well, our in-house person charges $22 an hour. If he's there for 15 minutes, guess what? Your bill's going to be $5.50. If you send an HVAC contractor over there, and a lot of property managers companies do that, and I'm not, there are a lot of good companies out there, don't take that the wrong way, but this happens more often than not. The HVAC contractor is going to charge $60 for a service call, another $10 to push the switch, and they're going to get a $70 bill versus a $5.50 bill. So, we're out here. We want to establish a good relationship. We're happy with our management fees. We're not trying to have all these other different profit centers to gouge the investors. We want the investor to get a great cash flow, and that's what we're all about.
Pete, it looks like we have a couple questions about, people are curious about what the average real estate taxes are and what insurance costs are after that first year.
Sure. Typically, on the price range house, sometimes it depends on the size of the house and square footage and all that. Insurance, you're looking somewhere between $400 and $500 a year, and that's pretty typical. And obviously, you can get a Cadillac policy. The lower the deductible, the higher the premium. I've always been more in favor of higher deductibles because you don't want a nickel and dime insurance company, because then they're just going to cut you off. You get a couple Mickey Mouse claims, and all of a sudden they say, we're not doing this anymore. I'm more for insuring against a catastrophe, a fire or something that, where you really have a roof damage because of a huge storm, the roof comes off or something like that. So anyways, insurance typically around $400 or $500. As far as real estate taxes, again, it depends on a lot of different factors, but the houses that we have, you're typically looking at somewhere between $1,000 and $1,500 a year. So you're looking at, somewhere between $80 and $120 a month, more or less. And of course, we would have that for each particular house that we have that's for sale. But those are kind of good average numbers.
And we've got one more question I want to throw out there to you that we've got right now before we go into the tour portion of the webinar, and that is there an equity position in these houses?
Well, I think so. I think so. We've had houses that have sold for higher than the cheap turnkey houses, and the market is a little volatile right now in a sense that there's been some price drops, but I think right now we're really bouncing against the bottom, because I've personally found it a little more difficult to get the quote unquote great deals. Just now there are only 2 great instead of 3, but yeah, I think that there certainly could be a little bit of automatic built-in equity on some of the houses.
And I'm sorry, one more question just came in. The question is, how often does the rent go up in the Dayton area?
Well, the rent has been very, very stable, even in this economic time. It's not unusual if we have a house that's currently renting for $700 a month, and then the lease comes open. It's not going to go from $700 to $800. That's not going to happen. At least not right now. I think once the economy picks up, and that could be 2 or 3 years from now. But right now, if it's a $700 a month rent and the lease is up, typically we'll go to around $715, $720, and it's always whatever the market will bear, and we push the envelope to get the max. But that's what you're looking at right now.
Okay, and and we continue to get questions in, so I guess we'll just go through them now, if that's okay, Pete.
Sure.
The first one that just popped up is, are there a large portion of tenants on public assistance that you deal with?
We have, as I mentioned before, over 200 units they're all single-family houses that we manage, and you can count the ones on public assistance on one hand and probably have about 3 fingers left over. I think we might have 2, maybe 3, and once those leases expire, we're not going to renew them. We found that it's much more management intensive. We found that, and this is a generalization, don't take that the wrong way, but we found that people that actually pay for the houses themselves take better care of the houses. That guaranteed rent, so to speak, there's a price to pay for that. And the houses have been, I'd say, taken care of a little bit less by the tenant occupants when we've had Section 8 tenants or public assistance type tenants. So consequently, we've made a business decision. Right now, we don't need to do that, and we really don't see that we're going to be doing it in the future. Of course, never say never, but right now, we feel that we prefer the private pay tenants. No, the rent isn't guaranteed, but we have a very, very high collection rate because we're very, very discriminating in the sense of income and rental history and those kinds of things on the front end. So consequently, not saying we never have to evict someone, because we do, but we've got a great track record, and since we do have the nicest houses, we can be more discriminating as far as the level of tenant, as far as income and good rental history. So long-winded way to say we're not really doing much as far as public assistance type tenants.
It also looks like, Pete, a couple of people want to know your opinion as far as what you see as the trend in the real estate market in the Dayton area over the next couple of years.
I think it only has one way to go, and that's up. We're bouncing against the bottom right now. I think over the next couple of years, we're not going to see a straight arrow up or anything like that. The economy is still very, very fragile, not just in the Dayton area, but also throughout the country. But with some job growth here and the values of the property, if the banks would loosen up just a little bit as far as for owner-occupant types, I mean, what the payments are in relation to the properties, you could see a big swing in people buying properties and bidding them up. It hasn't happened yet. It hasn't happened really anywhere yet because of our fragile economy. But with the prices where they are, and if you look at the houses and what you're getting for your money, I think that I think you could see some good movement. I would not buy these houses. I mean, yes, we want to sell you houses, but I would not buy these houses for a quick turn. real estate is never that kind of investment. This is a good, great cash flow type investment. But it would not surprise me one bit if, we saw really, a decent increase over the next couple of years.
And one more question before we move on. The question is a pretty simple one: is there a contract involved with the property management after the first year?
Yes, and the owner can terminate it at any time they like. If they're not happy with our services, we don't want to hold someone, a gun to their head, say, hey, you have to use us. As a matter of fact, if you don't want to, after the, you get the free management the first year. If you want to do it yourself or hire someone else, you're certainly welcome to do that. Obviously, I'm of the opinion that nobody does it better. but to answer the question, there would be a contract, but you have the right to terminate it by giving us 30 days notice. If for any reason you want to, you can terminate if you want to sell the house or just want to go a different direction. Okay.
Great. Well, I know there may be some additional questions out there. Feel free to continue to get your questions in, or like Pete said before, you can email us or contact us directly with any specific questions that we may not have answered for you today. But as of right now, I want to go ahead and move into that portion of our webinar today and just go through the houses that we currently have in inventory. I see here this first house.
Sure. Can I just say one thing?
Oh, sure. Sorry, Pete.
I just wanted to, first of all, thank everyone for hearing, attending again. And I kind of want to introduce Corey Day. Corey's our sales manager for cheap turnkey houses and triple net houses. And Corey is a guy that really exudes integrity and honesty. He's been a salesperson for a number of years. He's been a real estate, in the real estate brokerage industry, real estate investor himself. He's been in new home sales. Corey has a degree from Miami University of Ohio, and Corey is not a pushy salesperson type. He just really helps investors and customers make the best decisions for their circumstances. So he's a really easy person to talk to. So once you go through the houses, the little inventory here, feel free to call Corey anytime. He's a great guy to talk to, and he's a great person on our team. So go ahead, Corey.
Thank you, Pete. And I'll ask Pete if you could hang out just until the end of the webinar. There may be a couple more questions we want to get to at the end. But I'm going to quickly go through the inventory here with you. You can see the house that's up on your screen right now is 58 East Hillcrest Avenue in Dayton, Ohio. This is a 3-bedroom, 1-bath, just over 1,000 square feet. It does have a full basement and a detached garage. The monthly rents on this house would be $650 a month, and that would be your amount that is guaranteed for that first year. As you can see, annual taxes are $1,414. Your estimate for homeowners insurance is $400. So because cheap turnkey houses are paying those amounts for the first year, your return that you're looking at on this property for the first year is right around 17.3%. Now again, that doesn't include any type of maintenance, but the great thing about the first year is we're also including that 1-year warranty along with the house. That is renewable at your option. So if you want to continue that warranty after the first year, which can really help out if you have a major maintenance item on the house during the long term, and cut your costs down greatly. Even after that first year, your estimated return, you're looking at about 13.3% once you have the need to pay your taxes and the insurance on the property. At 229 Castlewood Avenue in Dayton, Ohio. This is a 2-bedroom, 1-bath, 112 square feet. You can see from the pictures that the house has been totally renovated. It does have a basement and an attached garage. Monthly rent on this one as well is $650 a month or $7,800 per year. Your annual taxes are $1,899, insurance $400. So your first year return 7.7%, priced at $43,900. You'd be looking at an estimated going return of about 12.5%, which again, I'm sure everybody can agree in today's market, in today's economy, is a great return on your investment. Anybody that wants any additional details on any of the properties that you see today, feel free to contact us directly. We've got more people registered and on the webinar today than we have properties available. So if you do see something you're interested, don't hesitate to contact us. we want to make sure that we give everybody the opportunity to get in on one of these deals. The next house, 4352 Redonda Lane in Trotwood. This is a 3-bedroom, 1-bath ranch-style home, 864 square feet. This house does not have a basement. It's on a slab. You can see the house has been renovated and is rent-ready. Monthly rent again on this one is $650 per month. Annual taxes a little lower than the last one, $1,331. Again, same for the insurance estimate, right around $400. Your first year return that we're expecting on this house is 17.8%. Next property, more of a traditional 2-story house located at 328 Point View Avenue in Dayton. It's a 3-bedroom, 1-bath, 1,234 square feet. It does also have a full unfinished basement and a detached garage behind the house. You can see from the pictures that the house has been totally renovated. It is monthly rent on this house is going to be $650 as well. Your annual taxes are $1,535 and insurance at $400. First year return would be about 17.4%, and thereafter you can figure on about 13.1% as an annual estimate of return. Again, priced at $44,900. Great 2-story house. So if anybody wants more details on this one, please contact us. Next house, 4033 Old Riverside. This is going to be the last house on a tour for today. You can see more of a Cape Cod style story-and-a-half house. This house has 2 bedrooms upstairs. It has another room on the first floor that could be used as a bedroom, but we're counting as an office. It's 1,073 square feet with a full unfinished basement. Monthly rent again on this one is $650 per month. Your annual taxes are $1,692 and an insurance estimate of $400. Your first year return on this one, 19.5%, and a lot of that is due to the fact that it's the least expensive house we have on the tour today at $39,900. So again, after that, your estimated annual return at 14.3%. This would obviously make a great investment for anybody out there looking to jump in and either get one of your first real estate investment properties or just add to that portfolio that you're starting to build while the time for buying is good. I'm going to see again, if you have any more questions before we kind of wrap things up today. Bear with me just one second. Question is, I live close to Dayton. Can I tour a house before purchase? So I'll go ahead and answer that. And certainly, we invite anybody that wants to visit and tour properties in person to please do so. We're more than happy to make time and schedule and help you schedule that visit and show you through the houses we have available and show you the Dayton area. We want you to be comfortable with the process. You know, a lot of our investors are out of state, and many don't have the time or the availability to come in to look at property. But anybody that wants to do that, we do invite that. I think that's all the questions we have so far. I want to, next question would be, what is the next step? Well, again, if you're interested in reserving or finding out more information on any of the properties we talked about today, or if you simply just have additional questions that you would like to answer one-on-one, please feel free to contact us. You can see our toll-free number is listed there. You can also email me. My email address is cday@cheapturnkeyhouses.com. So feel free to go ahead and jot that down. Again, we look forward to talking to each and every one of you, and whatever we can do to help, we will. Pete, I'll give you a chance to say goodbye, and then I think we'll wrap things up today.
Certainly. Well, again, I really appreciate all of you taking the time to learn a little bit more about Cheap Turnkey Houses. Our website, cheapturnkeyhouses.com, even has virtual tours of the houses if you want to see a little bit more than just the snapshots. Anytime there's an investment, there's always a lot of questions, and we want you to make a good, intelligent decision, and we'll do everything we can to answer the questions. And if you decide to go ahead and invest, it's incumbent on us to make this a great investment for you, and that's what we intend to do. So again, thanks for attending, and hope to hear from all of you. And you know, enjoy the rest of your day, and you know, come visit us in Dayton. So, Corey, anything else?
Thanks, Pete. Just to reiterate what Pete said, I want to thank everybody for joining us today. I think it was a very good first introductory webinar for cheap turnkey houses. Again, anybody that needs additional information or just would like to ask any questions, don't hesitate to give us a call, and enjoy the rest of your afternoon, and wish everybody success.